Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Wow, never saw Stash, another Wealth Coffee Chat. Marvelous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Good morning. Good morning. Looks like we're a little bit lonely today. Not too many people have joined in, which is all right. Can understand. It's been Anzac Day. Everybody's probably taking full advantage of the long weekend. However, if you are going to be listening to this on or a recording of this, stay tuned to this. Listen in on this. I think it's super important that we go through what we're going to go through today. And I'll just dive in. And I'm going to be talking about what I have conversations with my clients day in and day out about what's going on in the market. And the question I always get is, when do I need to refinance my mortgage? Do I wait till interest rates drop, or do I throw the dice and find out, well, is this going to be the right position for me to do now? Is this something I need to do now? And there's a few things that people need to be aware of. They need to be looking at the market, what's going on, and making really informed decisions. Just this morning, I went on Domain's house pricings just to see what's going on in the market. Now, I'm not endorsing their perspective on what's going on in the housing market, but I tend to look at a few different market indicators, market researchers, to find out, well, what do they see going on in the market down the road? And that helps us as property investors to stay informed, to make good decisions. And I don't know about you, one of the things that my clients ask me about is, well, should I do it now, get some equity out, and then position myself so that when the market does adjust, I can actually take action? And what is it in the market that we're looking for? What are the indicators that we're looking for? So property prices are doing pretty good. They're not going anywhere as far as on a downward trend. They're on the upward trend, right? But what's else going on in the market? What are the banks doing? So some of the things I look at from a finance perspective is, well, what are the fixed rates doing? Are the fixed rates dropping? And the answer is yes. So the banks are definitely positioning themselves. And it's not just the fixed rates. I've even had some banks come to me this last week and reduce their variable rates. And I'm not sure if you guys know what a fixed versus a variable rate. We can talk about that in another episode. But what this indicates to me is they're trying to lock in their clients, their customers, so that they don't refinance anytime soon. Because when the market starts to drop, as far as the interest rates, when the interest rates start to drop, the market's going to start buzzing even more than it already is. And we've got a problem right now in the market, right? We don't have enough supply. We do not have enough housing to help support the actual population, which is a good problem to have if you're a property investor. But it's also really, really important that you are marking yourself, setting yourself up for success. And I want to talk about a concept that Jason, our CEO, the education guru, likes to call, and it's called an equity lock. And this is just something that we need to actually think about, right? We want to position ourselves so that we are ready to move when the market starts to adjust, interest rates start to go down, and putting ourselves in a position so that we can jump on it. Because remember, we don't have enough stock in Australia. There's not enough houses. So that means once the interest rates start to drop, everybody's going to be in a flurry of refinancing, and then they're going to start purchasing. And if you're a smart property investor, what are you going to do? You're going to make sure you're positioning yourself properly today. You need to do it now. That's the big takeaway. That's what we need to do. We need to think about it. If we were to refinance today, what would that look like? And this is something that I want to show you guys. I'm going to just share my screen here, and I want to show you what it's going to look like once we refinance. What is our borrowing capacity going to look like? What is that going to look like when we start tapping into the market? What is it going to look like when interest rates start to drop? How are we going to make sure that we're in the right position for that? Just give me a second. You're going to see a little bit behind the scenes while I go to my screen. All right, here is our calculator. So Positive Money has a unique calculator where we can actually look at all the different banks and their policies. And if you haven't seen this before, this is a great tool that we look at when we are trying to help clients understand where they sit in the market, where they sit against what the banks look like. So here's the interest rates now. And I'm just going to go through the scenario with you so you have an understanding of where I'm coming from, where this information is coming from, and to see if it actually works for you, if you can relate with this. So I've got Karen and Billy. They've got one dependent, Karen and Billy, one dependent, and they're earning pretty good income. Karen's on 100, Billy's on 100,000, and they are ready to go and move forward on their next purchase. Okay. The next purchase could be anywhere, right? But what we'll do is we'll stick around about a $650 purchase price. And the funny thing is, it's not just the interest rates that are projected to go down, but another positive thing is going to happen in the market as well. And that's going to be rental yields. From what I can hear in the market, in the ether of the market, is that we are positioning that our rental yields are actually going to be going up as well. They're going to be increasing. So that also is a benefit. So what I've done for Karen and Billy is I've increased the rental yield just by $100 per week, which is a fair estimate from what I can hear in the marketplace. Again, I'm not a property manager. I don't know that. If you want to know more about that, tune into Wednesdays with Cass and his property management team, where they kind of go into that. But look, what if Karen and Billy want to go ahead and purchase? And at the moment, they're a little bit tight on the market, right? Interest rates are still pretty high. But what happens when interest rates start to go down? What if they drop by, let's say, 0.25? Just a slight drop. And what we can see here, and I want you to see this on the screen. Let's look at the monthly capacity, the max capacity right here, and the monthly surplus. They're starting to go up, right? Now, what if it goes up another 0.25 to, say, another 0.5? It goes down, it drops by 0.5. You're seeing more and more increases in the monthly surplus. Now, what's important to know is this is just the purchase, okay? This is just the purchase for Billy and Karen. Karen and Billy also own another property, okay? They also own another property. So any adjustments that we're doing in the purchasing rate, well, we need to make sure that they're positioned also for their existing property, right? So say right now, I've put in for Billy and Karen a pretty good interest rate in the market today, which is 6.3 for an owner-occupied property. Now, if that rate were to drop by 0.5, let's say, what does that do to their borrowing capacity? As you can see, increased in borrowing capacity is clearly evident right here by just a drop. Now, this is why it's super important. Now just keep in mind though, guys, this is just reducing the rate. What we also need to keep in mind when we are property investors is a holistic approach. We also need to think about, well, what is our monthly cash flow? How does that impact it? And when we take a look at adjusting the monthly cash as a focus, making sure your monthly cash flow is increasing, we also need to make sure that we're looking at possibly extending your loan out to 30 years. Now, there's some pros and cons with that. And for me as a mortgage broker, I want to make sure that my clients, my customers are informed, that they do know what they're getting into. So anytime we re-extend the mortgage out 30 years, that means you might pay a little bit more interest. However, as property investors, most of the time, what the focus is that monthly cash flow. And we need to increase it. We need to make sure that they are getting as much borrowing capacity as they possibly can for their next purchase, right? Now, we got to think about it also. So if Karen and Billy want to go ahead and get this property, do they have enough money? Do they have enough money in their cash reserves to purchase? And as I was saying earlier, if the market is positioned that as soon as interest rates start to drop, that everybody's going to be going into the market again. They're going to go out and purchase. And with Australia having a low stock or insufficient stock for its population, you're going to be one of many out in the market. So what are you doing to position yourselves to make sure that you are ready to move as soon as the rates drop? And the easiest answer to that is jumping into a refinance, doing an equity release, and moving it very quickly. We want to make sure that you've got enough money ready to go so that when interest rates drop, you've got sufficient equity to move forward. Yeah. And that's what the nature of the game is. We want to make sure that we look at every client holistically, look at your situation holistically. And if your broker is not doing this, they're doing you an injustice. You need to make sure that you are informed because they know what your needs and objectives are. And what we have to do is be aware of what that means and how we can help you get to that next level, right? So important that we actually do that. So I'm going to stop sharing my screen and go back into the mix so that we can actually see that this isn't a situation where you just want to jump in willy-nilly. You want to make sure that you are looking at everything. You're looking at what the market's doing. You want to make sure you're looking at what's going on in the lending landscape. And you need to know what your borrowing capacity is today and what information you need to get yourself to, what tools you need to use to make sure that you're positioning yourself so that when the market does start to adjust, you're in a good position to take advantage of it. Simple. It's simple. And if you're not using a mortgage broker that has that experience, that knows how to help you structure that, because we go off of what you're looking for. If you're looking to make sure you get into the next property, we'll show you what your borrowing capacity is now. We'll show you why refinancing might be something that will help you position yourself for when the market adjusts. Well, again, I know everybody's having a long weekend for Anzac Day. I appreciate those who are going to be tuning in later. That's it. Reach out if you like what we've talked about today. Go ahead and like and subscribe to us. If you've got any questions, just send us an email. I've got it scrolling at the bottom. And I've got a QR code as well. Just pop that up at the top. Right there. And honestly, guys, reach out. If you have questions, if you want to see where your position is, just give us a call. Shoot us an email, book in a time with me. I'm happy to help you out. And if you guys want to know more about why refinancing is so important, we'll be issuing out a few links to some webinars that we're going to be doing for the next couple of weeks. I think I think now is the time, which is what I'm hearing from our clients, that they're really ready and wanting to position themselves so when the changes in the market happen, that they're ready to go. So looking forward to having a meeting with you. If you guys have any questions, like I said, just reach out to us. Happy to help. Have a good one. Take care.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.